Okay, here we go, guys. Guys, do me a favor, quickly go onto the chat and just say we've started. Tell your team that we've started. So they all jump on right now. There's no gap. So guys, welcome to the training today. It is, think like a boot camp, Billionaire's Broke Mindset. It's a really, really amazing training, actually. It's got a lot of detail, so you definitely need a notebook and pen ready, guys. So put your cameras on, get a notebook and pen ready, because this training will definitely be an eye-opener for you guys in kind of understanding how billionaires think in terms of investment, how billionaires like where they go through challenges, and it's just the perfect way to end such an amazing week. Did you guys have a good week so far? Put 111 in the chat if you've all had a great week so far. Great trading week, great week of learning, great business week. Like, guys, I want to see that you guys have been happy this week. We've had unbelievable amounts of just growth this week through this boot camp, and obviously like the training yesterday with ads was insane. How many of you guys jumped on that? It was pretty fire. Like, honestly, that was such a good training. It's been such an amazing week, guys. I'm so happy and grateful that you guys are here. We're going to do our grateful after in the chat, so let's get started, guys. So get your notebook and pen ready. Here we go. We know the agenda, guys, so we've all had an amazing week. You should all have notes on what's on the screen. You should all make sure that you catch up. So my main thing for this is making sure that you have caught up with this entire week's growth, because at the end of the day, if you guys are prepared for the next week because you've already done everything this week, it's much better, okay? So don't waste this weekend in not catching up. It will backfire on you. Trust me, it'll backfire on you, because the team, every training that they do more than you, they're more advanced than you, okay? Now, this training is provided by an in-depth look into Warren Buffett. Hopefully you guys already know him, you've heard of him, you know his stories, you know pretty much everything about him. But this is just to go over some of the decisions that he made. This is a timeline of his investments. So write down timeline of his investments, his mindset, and the lessons he's learned over the time being, okay? So that's pretty important, guys. We're going straight into facts and figures, so you guys can understand kind of what it is to kind of think like a billionaire, okay? And you'll be very surprised. It's a very broke mindset, okay? Now, I don't mean broke mindset in terms of broken mindset. I mean, he genuinely thinks he's broke. Okay, like he genuinely thinks he's poor. So let's go run down kind of straight into the training. Now, you guys should know that his company is Berkshire Hathaway. We did mention this at the start of the training of this boot camp. So it's quite interesting that we're ending it with him as well. So it just shows you how influential he really is. I looked at all of his lessons that he's learned, and honestly, like, I don't think anyone could say it better than he does. So just to give you a rough idea, because a lot of people might ask you, especially in investment, kind of what is the most successful kind of return of investment in terms of, you know, companies and stuff like that, guys. Berkshire Hathaway roughly makes 23% a year, okay? So write down 23% a year. So when you guys are stressed because you haven't caught your 100 pips, or when you guys are losing a trade, you got to imagine the most successful investor in the world has a company that literally makes 23% a year, okay? That's not a lot, right? That's not a lot. So you got to imagine the mindset you have to have that kind of return of investment. Okay, if you think that the main person is happy with 23% a year, then maybe you guys should be happy with 23% a year, okay? Because it's called compounding. He compounds it every year. We're going to go through it. You guys should know about that. But let me just give you in a visual sense. If you invested 30 years ago with 1,000 in his company, right? If you invested 30 years ago with 1,000, your investment now would be valued at 500,000. Your investment now would be valued 500,000, right? That was 30 years. Now, guys, I think you can imagine that's a pretty good pension fund, right? If someone did that, they're doing pretty well. Yeah, that's long-term growth. And we're going to go through the lessons that he's learned. So then we'll run over at the end of the training kind of what lessons you should take from him. And these are the key ones, okay? So 1965, guys, I'm going to go through a timeline of his events so you guys can then research on your own, and then you can actually find out what relates to you the most. Every single point that I'm going to go through is very, very important for you guys to think in that broke mindset, okay? So 1965, guys, you should know that the Berkshire Hathaway did start as a textile business, okay? It was a textile business. Write that down, textile business, okay? Now you're going to think, why am I writing all this down? Guys, everything will make sense. So it was a textile business. Now, the first decision that he made in this business was that the cash flow was used to grow, not to grow the business. So write that down. The cash flow was actually not used to grow the business further, but instead it was used to buy other securities, other stocks, other trades, right? So this is quite revolutionary if you think about it in 1965, in terms of everyone was trading, everyone gets that. But this was a kind of key defining moment of how a business was now using its profits, not for, you know, the lavishness, not for buying stupid shit, but it was genuinely used to invest in other companies, in other stocks and shares, right? So this is actually a really good lesson just in itself, right? The lesson is that he said, not throwing any good money. Write that down, not throwing any good money. Okay, so he had a portion of income that he was using from one business, and he was using it to invest in others. This is an important lesson to learn, okay? This broke mindset really is like, I'm not going to flash everywhere. I'm not going to spend all this money on this and that and he actually started diversifying his income. So you should write down, diversify your income. If you guys have money that you're earning right now, think about how much you're diversifying that income. Okay, so that was an important lesson in itself, and he actually quoted as not throwing away good money. 1967 came, guys, 1967, and it was invest in circle of competence. So let me tell you what this means, and I think this is genius in itself. You can tell he reads a lot. Berkshire acquired 2 insurance businesses for $9 million with a long-term goal, right? That's what he did. He invested in 2 insurance businesses for $9 million with a long-term goal. Now, the reason why he says invest in circle of competences is that he was very good at insurance, right? He personally understood the industry, right? He personally researched about insurance non-stop. When you guys see that he reads a lot, this is where it starts to really kick in, okay? He's investing in things he knows about. He's not investing because someone says, buy this, sell that, do that, right? He's not looking at that. He fully says in 1967, invest in circle of competencies. So if you guys are good at something, right? If you guys are good in an industry, for instance, my background has always been sales, right? Has always been sales. So I pretty much know the industry until I definitely need to know more, right? So I've been in it for, it's crazy, 11 years now, right? So I've been in it 11 years. So I know roughly the facts and figures, right? So I know a business roughly should grow by a certain percentage. I know a business how much it should spend on marketing. I know roughly how much a business should make per thing they are doing, right? So I know that, right? So in this lesson, it would be invest in something that I know, that I will research on, that I have an interest in. Okay, so if you guys are interested in something, you can transfer that into making money from it by investing in things that will help that interest. Okay, so if you guys are traders that really have an interest in trading, then your focus, from Warren Buffett, not from me, should be invest in that, right? Invest in that to increase your business. So you should have a trading business. If that's where your interest is, if you enjoy educating, if you enjoy speaking about trading, if you enjoy the network, then that is what you should focus on. That's a key lesson, okay? 111 in the chat if that makes sense to you. And actually, to be fair, that's what we should all be doing, right? If we're interested in something, right, we should invest in that because we know the facts and figures, okay? Don't invest in things where you're not interested in. It makes no sense, okay? It makes no sense. So I'm interested in sales, so I will look into investing in a business that increases sales and marketing for other businesses because that is my competence, yeah? I read about it, I research on it, my background's in it. That is what I should build in. I am fit's pretty good. But that is where I should build in that, okay? Next thing, guys, 1977, cash flow injection. Now, Warren Buffett invested in blue chip stamps, right? At the time, it was random. Blue chip stamps, very random, okay? Now, when you analyze why, it's actually genius. He invested in a business that generates cash with no risk. Write that down. Cash with no risk. Yeah? You got to think like a billionaire, right? So if he's going to invest in a business, why is he investing in that business? Okay, well, blue chip stamps is a business that generates cash, actual cash with no risk. Okay, they buy the stamps, they sell the stamps, right? Buy the stamps, sell the stamps. It's easy. It's business longevity. It's cool. This means that you have a business with cash flow injection, right? So what this is saying, guys, is that maybe you should look into other, I'm not saying that you will, but you should look into businesses that give you cash, right? That give you cash with little risk. Yeah, little risk, little investment, right? So if you like cakes, yeah, I'm not saying you will, but if you like cakes and you like baking cakes, you can go and spend up and down the road just selling some cakes, yeah, for cash, right? Go up and down the road and say, hey, I got cake. I'm not saying you will do this, guys. I'm just saying this is an idea, yeah? I really want cake, by the way. But if you just sell it, like you go and sell the cake, like little risk with cash injection, that's a good move to make. Okay, that's a good move to make. That's a very small scale what he did, but it gives you an idea that cash flow injection is important. Okay, it's all good buying businesses on credit. It's all good getting your loans and getting all of that. But sometimes it's better just to get a business that makes cash. That's it, straight transfer, nice and easy. I made some cash on that, right? You can sell a lot of things with just cash and very little investment, okay, and little risk. 1977, guys, successful growth. Now, I want to really stress on this one, okay? Write down this. Successful growth is this era of what he had, successful growth. Now, the insurance company that I was talking to you guys about not too long ago, right, grew from 22 million to 151 million, right? 22 million to 151 million, right? That's that company that grew from that. So, right, if that's pretty impressive, guys. That's really impressive, actually. Now, the reason for this successful growth is that Buffett's knowledge of insurance and hiring individuals in that industry. So I'm going to say that again because it's such a huge point to think about, to really go to that next level of billionaire mindset, yeah? He did not grow because of all of, he just bought a random company and then, he didn't grow like that. It wasn't really down to the company in this sense. It was down to his extensive knowledge and his hiring practice of outstanding individuals in that field, right? So if you guys really want successful growth in your business, in your life, if you don't want to work for anyone forevermore, you have to have, well, not have to, but this is what he said. You have to have an extensive knowledge in that industry. Now, this is probably where the reading came from, by the way, guys. He had an extensive knowledge in that industry, and he started hiring outstanding individuals on the basis of his knowledge, right? So if you want a company to grow, if you want to really be a billionaire, millionaire, and all of that, you have to have very good people skills. Okay, you have to really know how to network your way to the key individuals so you can hire them, right? There's no point saying, guys, that you want to have a 7-8 figure business and not be able to speak to people. Yeah, speaking to people is the most basic form of growing your business. Okay, if you can't close someone, I really strongly suggest that you go and research again and again and again and how to persuade someone to do something that you're asking, right? This is a key life skill for all of you. You can't hide away from it. Okay, if you want to be successful in business, okay, trading is something else, right? Trading in itself is amazing, but like guys, you can't just base everything on trading profits. Okay, you got to diversify your income. Well, way to diversify is growing a business. If you can't speak to people, if you don't have the confidence to speak to people, I can tell you right now, you're not going to hire the best people for your business, right? You're not going to get the best people in your business, okay? Because they won't have confidence in you, okay? So I'm saying, like, this one stage of successful growth purely came down to knowledge and being able to recruit highly skilled individuals. Okay, so if you want to get the best, you have to be the best, right? How many of you guys agree with that? If you want to get the best, you have to be the best, right? And I'll tell you the main person that really pinched me from one company to another. She was the best. She is the best, right? I still daily talk, not daily, maybe weekly, monthly, speak to her, because she's been in the industry that I'm in for over 40 years. And not only has she been in it, but she's been the top woman in it, right? So that is a person that I would happily always go back to if she ever needed help, right? Because if you want to take this to the next level in becoming successful in life, you have to improve your own skills, right? You have to improve your own knowledge. Don't bank on someone else to do it for you, because it's not going to happen, right? Now, next stage, 1980, buying low, right? Buying low. Now, Berkshire Hathaway increased its shares for a company called Geico and American Express, right? So write these two companies down. It's quite interesting researching on this, right? I actually like this stage, one of the most favorite ones that I actually really liked. Now imagine this company, right? This company was going to go under, right? It's so close to bankruptcy, right? This company was so close to bankruptcy. Guys, you should know Amex, right? Right? It was so close to bankruptcy in 1980, okay? Now, what Warren Buffett did is that he increased his shares to 7.2 million shares. He bought low. Everyone knows as traders, buy low, right? He bought low. So that's what he did. He bought low. Now, what he then did, right? He justified why buying low. Okay, he justified buying low. And the reason why he did this is that he said the business problems were temporary. So write that down. Business problems were temporary. So he did not mind investing heavy in a company where everyone's coming out, because the problems were temporary. So you guys got to understand, if you're going to invest in a company, the first step is to ensure that the risk is low, because the downtime, the problems it faces are temporary. So you guys should be seeing right now in the UK that Bella Italia, all of these companies are filing for bankruptcy, right? So there's investors that are going to be looking at it and saying, are these problems temporary or are these problems not, right? If you don't want to be a novice investor, you have to understand how, and I'm going to go through some of the steps that he used, but you have to really take this seriously and understand how, okay? So that's another thing you guys have to understand, right? Buying low is great, it's amazing, but are the problems of that company temporary or not? That's the next bit of judgment, and you will only know that through extensive knowledge, okay? You're not just going to know that, right? You're not just going to be like, oh yeah, I think it's temporary. You need to really know the industry. You have to really know yourself, for one. You have to know also the company inside out, okay? You have to know the ins and outs of the company. So this is another mindset that you have to have, guys, is you can invest in low. So yeah, people do, when it crashes, they buy up. But are you buying the right things at the right time? Or are you just literally thinking that this will be a get rich quick scheme, okay? Sometimes it's not. Now, 1985, capital expenditures. This is another thing that you should write down. When you see, so this is what he did. When you see a new company, so this is when he actually shut down the textile company, by the way. So you guys can write down 1985, he shut down the textile company completely. He was like, okay, I can't do this anymore. I'm done. We can keep it as the holdings, we can keep it as buying, but we're not doing the textile anymore. So that cash flow he had before is now gone, right? When this is his justification, when you see a company making new investments in a dying business, when you see a company making new investments in a dying business, you should not invest in that company. Now, what this means is he was watching out, right? He was looking at competitors, and he was really researching on people investing in certain competitors and what happened to it, right? This is extensive research. Once again, he's always reading, he's always looking, he's always researching. He found that there was other companies that were investing in a company similar to his textile, and it was dying. The investment was dying. He was learning from past mistakes. So write that down, learning from past mistakes. He understood that if he kept investing money in this textile business, there is no point, right? There's no point. He can see the facts and figures. Everyone says men lie, women lie, facts and figures don't, right? Everyone says that. He used that to the T, right? He shut down the textile bit because he knew it was a dying business and he had to cut short, okay? So you have to see if something's dying and it's not working, then that's an impact that you should make, okay? Now, 1986, guys, I like this one. Everyone should like this one. Luxuries. Everyone was buying private jets, corporate jets. Everyone was buying corporate jets, okay? Do you think he bought corporate jets? Yes or no? Write in the chat. Do you think he bought corporate jets? Yes or no? Put that in the chat for me. Do you think he did it? Corporate jets? Do you think everyone was buying them? Do you think he was buying them? Oh, you guys, you're all clever. You're all clever. All clever. No. He didn't. 1986, he made it clear, right? This is what he said. Why buy, you should write this down. Why buy something that costs a lot to look at? Now, that's actually very important, okay? Why buy something that costs a lot to look at? This is his mindset. This is where the broke mindset really, really started to get heightened, okay? In 1986, a lot of people were flash. A lot of people are still flash, right? They're buying jets, they're buying cars, they're buying everything that looks amazing. But he said, why buy something that looks expensive, that costs a lot to look at, right? Now, what this means, break it down. If you break down language, you'll know what this means, right? This means it didn't have much use. You could look at it, but what's the real use of it? How much money does it actually make you, right? How much money is it actually going to cost you? So when he thought about these, because this is the corporate jet kind of era, when people were saying, why don't you buy one? He genuinely says it costs a lot to look at. I don't need it, right? I don't need it. Now you guys have to understand, to have that billionaire mindset, this isn't just from Warren Buffett. This is a lot of billionaires. They think a lot like this. They don't want to invest in things that don't generate income, right? They really like investing in things that make more income. So the luxuries, guys, we all want luxuries. We all want them. We get it. We all love them. Yeah. But one lesson that you can learn is that the billionaires are very prudent. Okay. They're very prudent when it comes to their money. When it comes to their money, they're serious. Okay. Even looking at ads, guys, like how ads moves, prudent, right? Prudent. But guys, if it makes money and it makes sense, okay. If it doesn't make money, it doesn't make sense. I see that a lot. I see it with Jason, right? He's so, anyway. But yeah, guys, what you want to do is you want to make sure that you guys are thinking about what you're spending and does it make sense? I remember I had this conversation with Phoebe about a month ago. A month is insane. And we were talking about TradingView Pro and we were talking about clothes. We're like, nope. We're not going to buy these clothes right now. We're going to buy TradingView Pro because that makes me money. That saves me time. Yeah, you got to have that mindset, guys. Luxuries have to wait a little bit, okay? Luxuries have to wait a little bit. If you want that broke mindset, you got to have to wait for luxuries. Invest in things that make you money. Right now, I'm telling you, TradingView makes you money because you don't have to stare at the charts. Yeah, that £10 a month or whatever, 20, I don't even care anymore. If that literally is an expense to you, just remember how much time you're saving and how much money you can make if those trades come in when you say they will and you don't miss a trade. Yeah, that's one thing that I also make money from. I also make money from things that make marketing so much easier, right? if it makes marketing so much easier, all these apps that you see, like make this video, do that, like and it's so easy. Yo, I'm doing it because it'll get me an inquiry and it'll get me a sale. I'm doing it, done. I'm not going to invest in money that doesn't make me money, right? So all these deals that we're doing right now, it's going to make money in the long run, okay? It's an investment in your business. Guys, don't be shy in investing in your business. It won't work if you don't. The second you cut your business expenses, because that's the second you cut sales, okay? And that's why I'm so heavy on spending money on marketing and sales and all these ads and whatever it is. I'm so heavy and hot on it because I can see that the more you spend in that, the more income you receive. Don't spend money just on certain things because it looks nice. Spend on money, spend on something that actually makes you money. Next one, holding a period of investment. 1988, it was the holding a period of investment. Now, I actually had a conversation with Az before this training, and he said Coca-Cola, that's the best lesson. Yeah, Coca-Cola is the best lesson. Now, this is where this came in. So Berkshire buys 14.2 million shares of Coca-Cola. Everyone knows Coca-Cola. For $592 million. So write that down. $592 million. He bought 14 million shares. Now, when he bought this, someone asked him, how long are you going to hold the shares for? Like, you're buying them for so long. How long are you going to hold the shares for? And he said, forever. So write that down, forever. That's what he said. He said forever. I'm going to hold them forever. Right? Because he believed in this time is a holding period of investment. So he wants to hold them for a long period of time. Now imagine, right? Imagine that $592 million investment is now worth $630 million investment. Now, I actually, when I spoke to Az, because he's so amazing at investment, I actually spoke to him. I was like, that's not as high as I thought it would be. And then he said, you don't realize the dividends, right? He told me the dividends was 21 million a month on dividends, right? So you can look at the mindset of a billionaire, right? And Az, I already know you're going to be a billionaire because you're the one that said the dividends thing and I didn't, right? So that just shows you in itself like how powerful an investment really can be. Okay, so when he actually bought those Coca-Cola shares, everyone had the impression that he would buy them and sell them off again. That's what you would think he's doing, right? He's going to buy them and then he's going to sell them off again, right? But if you look at the investment itself, it didn't raise by that much, right? So 592 million in like 30 years ago, and now it's 630 million. It hasn't appreciated that much, right? But then when you look at the 21 million a month in dividends, that explains a lot, okay? That explains a lot. It shows you passive income. Yeah, it says he bought one share one time, and every month he's getting paid for it. Every single month. That is the key idea that you have to think about, guys, right? When you make an investment, how much does it give you every month? Okay, my one investment in this business, 100, I paid 300. I definitely paid 300 at that time, right? When I paid that investment once, right, I've been making it ever since. Okay, every month. The investment hasn't gone down, hasn't gone up, I'm not doing anything, but it makes money every single month. Okay, so you have to think in that kind of mindset, guys. A holding period forever. Okay. Now, 1989 was the time of earthquakes, and obviously he had an insurance company, guys, right? He had an insurance company. So you got to imagine he has to do a lot of juggling around, kind of understanding, are we going to give people in these earthquake areas? This was the question he was asking himself. Are we going to give these people in these areas insurance? We already know it's earthquakes. Are we going to do it? Yeah. The typical person would be like, no, right? That makes no sense. Don't do it. He actually did the opposite. So he increased his premiums for these earthquake areas and still provided them with insurance. So someone said, isn't that foolish? You know they're going to claim. You know they're gonna go. There's gonna be an earthquake. Like that's a risky business. His response was, "I would rather look foolish than act foolish." He said that it's much better to increase periods of time, premiums over a longer period of time than not doing it at all. So this is where he's kind of showing his risk of it. Like he's a little bit risky, you know. This is where he's showing his risky kind of investments. He's showing his risky savageness in business, right? He in 1989 was thinking, okay, we will still give that, right? And if you think about it, guys, this same kind of mindset is still used today, yeah? If you're in a risky kind of insurance, they do increase your premiums, but they still give it to you. Once upon a time, they wouldn't give it to you, right? They'll be like, no, I'm not going to give you that. But he did, and it paid off. So it shows you guys that you would rather look foolish than act foolish, okay? So he increased the premiums to at least kind of cover, because then he saw the math. So he's very into like, what is the risk? Okay, cool. If I increase the periods over a long period of time, that would cover if any earthquake did happen. At least then I'm still making something, rather than not do anything at all, right? If there was no earthquakes, no insurance, then what do? First, what happens to these people? Second, it doesn't make sense because then he's making nothing. Okay, nothing of nothing is always nothing, guys. Remember that. Nothing of nothing is always nothing, right? That's actually what my mentor taught me in sales. So he would rather make 1% sale than nothing, right? Even if it means like this cost may only make 1%, like it's still something. Whereas nothing of nothing is always nothing. Now, 1990, pessimism is your friend. Write that down. 1990, pessimism is your friend. Wells Fargo, it's an oil rig company, I believe, fell by 50% in shares, right? Wells Fargo fell by 50%. He obviously bought 4 million shares. Okay, he bought 4 million shares. Everyone was like, you're mad. Why are you buying this? This doesn't make sense. It fell by 50%. It's crashing. Why are you buying it? And his answer was, when investing, pessimism is your friend, euphoria is your enemy. That's a very, very important lesson in investment, guys. When investing, pessimism is your friend and euphoria is your enemy. Now, you guys looking at Bitcoin, yeah? All these people that bought Bitcoin ages ago and you were like, no, it's not going to work. Are you not annoyed at yourself for not sticking at it? I am, right? Guys, you got to imagine this lesson, right? Pessimism is your friend and euphoria isn't. It just shows you the investor mindset. Okay, you want to buy things cheap, you don't want to buy things on the hype. Okay, buying things on the hype is high risk because it can crash. Buying things when it's cheap is pretty good for you, right? How many of you guys agree with that? 111 in the chat if you agree with that lesson that he has just taught us. Pessimism is your friend, euphoria is the enemy. Yeah? We want to make sure that we really understand that, okay? So when you're in the charts or when you're thinking about investing in something and you're scared, I'm not saying invest in everything, but guys, if someone's telling you this is a safe bet, this will go higher, this will be better, this will do it, right? I'll tell you now, there is going to be growth. Don't let that pessimism cost you a very good investment, okay? You want to have that investor mindset where it's on your side, okay? You want to, right now, people are going to look into property, guys. I personally, my parents, right, into property, they are looking right now. Everyone's saying the property market's going to crash, right? Everyone's saying it's going to come down. It's not great. Don't do it, blah, 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 all of this stuff, right? But this is the time to think about property. This is the time to invest in something right now when it is about to crash, when it does crash, guys, because we have the long-term goal that it will make money. Right, the long-term goal. You don't want to buy a property when the markets are booming. That's dumb, right? You're going to buy it too high, okay? So you want to be in that mindset that you want to really, first of all, guys, trade, yeah? Second of all, buy cheap houses, That's my goal. That's my game plan for you. Trade, then buy cheap houses. If you trade and then I see you just going to Harrods every day, I'm going to slap you. But guys, trade and then buy houses. Okay? That's what we're going to do. Now, yeah, Louise, the house views, they are dropping in 100K. I was looking at penthouses yesterday. The same penthouse that I was going to think about for rent is dropping as well. It was like $3,000 and now it's like 1,500. It's sick. I'm moving. Like, guys, move, right? I'm moving. Next week, I'm gone, right? So, guys, you got to imagine pessimism is your friend. So right now, we are going to go into a recession. We get it. Housing prices, the demand's falling, blah, blah, blah. Start thinking of your long-term goal, guys. Get on that trading plan. Make sure that you are making decent money. Make sure you invest decent money because this is the time that you want to be involved in, okay? 1991, write down risk. Risk. There was a lot of risk in 1991. I don't know why I didn't finish the sentence, but never mind. It's all right. I remember everything. Right, 1991, there was a lot of risk, okay? There was crashes, there was this, there was that, right? There was incidents that were happening, right? There was a time Warren Buffett could have bought a lot more, right? There was a time he could have bought a lot more in 1991. He actually put his money, right, in certain places, and he was offered opportunities to buy different companies. 1991 was the year where he actually didn't, right? He didn't. He wanted to understand the risks of each investment, and he felt that, you know what, the risk is too high, so I'm going to stay out, right? That's when he started showing that actually you can buy as many millions of shares and you can buy up companies and you can do all of that if it makes sense. But 1991, it didn't make sense. He spent the year understanding risk. 1993, guys, identifying excellent CEOs. Please write this down. This is a very, very important thing for Warren Buffett's success. He had a brilliant mind, right? Everyone can imagine he had a really great mind. He's an amazing investor. He's on point, right? But one of the things that really grew his business was identifying excellent CEOs. People always think that to grow a business, it has to be all on you. You know, it's your kind of mindset. But guys, watch who you partner up with, okay? Watch who you partner up with. Are they excellent in what they do? Are they everything that you want in yourself? Now, I don't really know her name. They just refer her as Mrs. B. Rose Blumpkin, is the CEO that made like unreal amount of money for him, like 200 million in 1 year, and she just blew everything out of the water. She was like this 70-year-old woman, like she was really old. But anyway, this woman, right, was an excellent CEO for his company, and he wanted to work with her because she was so excellent. He built a lot of time. He gave her a lot of perks. He made sure he had accountability to her, and he built rapport with her. Right? So in 1993, this is the year where you have to, where he realized that identifying excellent CEOs to run his business was crucial. Okay, all the decisions he made about investment, and that was great, but who runs the day to day? Who actually helps you by the side? Who actually gets you sales in certain aspects? Who grows with you? Right, he identified 1993, well actually he probably did way before that, but that's when he really focused on making sure people understood that you have to understand and identify excellence. So write that down, you have to identify excellence. You want to find the best people to work with, okay? If you want a broke mindset, yeah, you got to know people who have the similar mindset to you. Okay, now you go into the flip side. Are you excellent in what you do? Because there's billionaires out here looking for them, yeah? So it's not just billionaires, millionaires, wealthy, successful. They identify excellence. So if you want to be pulled apart, or like if you want to be like in the right circle, like we said, you got to be that excellence. Yeah, you can't identify excellent if you're not excellent, guys. Facts. You cannot identify excellence if you are not excellent, okay, at something. So make sure whatever you do it well, whatever you do it well. Okay, you want to be excellent in that industry or whatever you're doing. Okay, don't think that it just comes falling into your lap. It doesn't. Okay. Now, next one, 1994. Extraordinary results in ordinary business. Extraordinary results in ordinary business. So write that down. Extraordinary results in ordinary business. All businesses need intense research. Now, he didn't go for something revolutionary, like insurance wasn't revolutionary, right? Even Coca-Cola wasn't revolutionary. Like it's a food company, right? It's a drink, guys. It's not like, oh, it's going to change the world. Actually, it probably did. But you got to imagine, right, that it's extraordinary results in ordinary business. So it shows you can grow in anything if you have extraordinary results. A lot of people think that to be the next billionaire, you have to create the best app, the newest technology. You have to develop something, right? That's amazing. Robots, yeah, something dumb like that. Like you have to create a robot. Or, you know, I have to have a car that drives itself, or, you know, a plane, all of this stuff, right? But he shows you that you can get so much money in ordinary business if you do it well. Okay, you don't have to be revolutionary in that sense. You just have to have an amazing result. Okay, so focus on the results of whatever industry you're in. Focus on the results. Okay, don't focus on the business concept as much as you focus on the result. A lot of people are changing their business. A lot of people are like, you know, moving this around, doing that, doing this, but they forget that maybe, you know, if they just stick to it and just have amazing results of what they do, they can create so much more. Okay, so guys, put in the chat for me an ordinary business idea that has extraordinary results. Anything in the chat for me. An extraordinary result for an ordinary business. Clothing, what company? What company, guys? What is an ordinary business for extraordinary results? What business can you think of? KFC, yes. KFC is just chicken. IKEA, exactly. IKEA actually made it because of you know, the credit, but yeah, it's a very good business plan. But Chanel, yeah, exactly. It's just perfume. Like, guys, you got to imagine all these brands and all these businesses you're thinking of. They're just normal things. Tesla, right? They're just normal companies, but they have extraordinary results because they go in on it, right? They make sure they're in on it. Guys, even if you look, yeah, McDonald's, it's just burger and chips for cheap people. That's it. They had extraordinary results for an ordinary business. So guys, don't think that you can't do that, right? Don't think that you can't do that. I am 100%. 100% is going to be a million customers. But guys, it's just something ordinary, right? So you want to really look at yourself and say, okay, maybe I don't need to be so revolutionary. Maybe I just need to do it well. Okay, a lot of people, a lot of chairmans, you know, chairman 500s, chairman 100s, they have the same business as you guys, the same product, the same price, the same everything, right? But yet they do it well because they have extraordinary results for an ordinary business. Okay, so if you don't have those results, it's because you're not going all in. So go all in. Next one. Okay, 1994. Corporate acquisitions. Now, if you do know Warren Buffett, you do know he's a savage. Yeah, he's not this airy-fairy type of guy. He will come and ask you for your business, and he will literally take it. He comes to you and he says, I want your business. That's it. It's gone. Right? Now, the reason why, obviously, he loves investment and he loves making money. But he actually said, deal making beats working. So write that down. Deal making beats working. That's fully how I live my life. And that's why I'm in sales. Making deals is so much easier than working, guys. Yeah. I'd rather make a deal, yeah, than go and work 8 hours like behind a till, right? It's more fun. It genuinely is more fun. You guys who can't close deals, I'm telling you, you're missing out on such a fun quality of life. Yeah, closing deals is fun. How many of you watch Suits? I actually want you guys to all go and watch Suits again. Yeah, Harvey Specter's living the deal, like life, like he's living the life, right? Because he's making deals. That's it. It's fun. Yeah, stop making out that making deals is not fun. Making deals is fun. The only reason you don't enjoy it is because you're not good at it. That's it. If you don't like making deals, it's because you're not good at it. Go and make yourself good at it, right? Because I'm telling you now, Warren Buffett wouldn't be where he is if he didn't know how to make a deal. Okay? He wouldn't be where he is if he didn't know how to do that. Okay? So you guys have to understand, being quiet and shy, yeah, will only get you so far. Closing deals is something next level. Okay? Closing deal. You want someone to talk about the deal you just closed that you don't even know. Let me tell you a fun fact about our beloved Ads, yeah? He doesn't know I knew this. I don't think he knows this. I don't even know if I should say it. But anyway, before I met him, right, we have a mutual friend. He goes, oh, did you know my friend Ads, he just closed £1 million deal. Right, just like that. And I was like, wow, this guy is sick. I'm going to go and be his friend. Yeah, that was probably a year ago. I don't even think he knows that I know that. But guys, you want to get to that level where someone's speaking about the deal you just closed to a stranger. Yeah, to a stranger. You want that kind of level of respect in deal making. Yeah, you want to get to that point where you're so good at deals that someone else is speaking about it. And that person is now finding you. Right? I found you, Ads, don't worry. But listen, right? You want that kind of level of work ethic, okay? If you're not good at deals, I really suggest you go and make it work, right? I suggest you research, you study on how to close deals, because Warren Buffett wouldn't be where he's at without this skill set, okay? He can make all the investments in the world, but people have to give you the yes, that, yeah, you can buy my business, right? People have to tell you, yeah, you can invest with me, okay? If you're not their friend, they're not going to do it, okay? So you got to make sure you know how to close deals. In 1996, he learned selling too early. So Geico, right? He sold shares for $15,000 in 1952. 1952. Now, the 20 years later, it was valued at 1.4 million. Right? 1.4 million. So he learned the lesson, maybe I sold too early. Right? I'm not talking about trading, guys. I'm talking about investments. Okay? Don't go into investments with a short-term mindset. It can cost you. So in his mind, he actually lost $1 million, right? That was more than $1 million. So you got to go and think about this lesson very well. If you want to invest in something, then be aware that you're not selling too early. Maybe the fear gets to you or something like that. But guys, it valued at 1.4 million 20 years later. Imagine 20 years of just sitting on 1.4 million rather than 15,000. 1997, patience. He learned patience. He put $4.6 billion into a long-term zero coupon treasury bond, right? If you guys don't know how bonds work, it basically is if it goes up, then you lose money. If it goes down, it's confusing as hell. I don't even know how to explain it well. But he put that in a very kind of like in a bond, and I'll get Ads to explain bonds better, okay? But he had to learn patience through this, because now there's 4.6 billion that's just sitting in something that doesn't make quick returns. That's the easiest way I can say it. But that he doesn't make quick returns, okay? So he learned that, but it's worth it in the long run. He learned patience. 1999, a lesson that he learned, was his worst year to date. 1999 was his worst year to date. He had a very, very bad year for Berkshire Hathaway. Now, you would think if a company had bad year, they're going to sack someone. Put 111 in the chat if you think, yeah, they're going to sack someone. The worst year to date, they're going to sack someone. CEO gets sacked, you know, like someone's going to get sacked. Put 111 if you're still listening, and put 111 in the chat if you believe, yeah, that they're going to sack someone. He didn't. He showed responsibility. He did not fire one person. He actually said he takes full responsibility for the worst year to date. And he said it was his obsession with looking for companies to invest in. He had lust, by the way, if you're wondering. That's the sin I think he had. Lust and indulgence, probably. But he took full responsibility. Okay, so if you guys want to think like Warren Buffett, right, with that broke mindset, beware of taking responsibility. If something goes wrong in your company, you can't blame someone for it. You can take full responsibility. Okay, that's the lesson that he learned. He took full responsibility. It failed. So guys, if your trading balance, which is your business, fails, yeah, you have to take full responsibility. Too many people I've come across, oh, I had this mentor and they didn't show me this and blah blah blah. Bullshit, guys. You've all got the same product. Okay, how can some people do it and some people can't? It's because of you. Yeah, so don't blame mentors, don't blame your teams, don't blame your educational process. We've all got the same products, guys. We've all got the same products, we've all got the same amount of time. Okay, take full responsibility if your trading balance is not growing. Take full responsibility if your business is not growing. If people leave your business every month, that's not down to the people, that's down to you, right? Take responsibility for it. That's the lesson. Next one, 2000. This is his last one to date, okay? The last one I'm going to go over anyway. Last one I'm going to go over. Sell in euphoria. Coca-Cola was his best investment, but he's also one of his biggest heartaches. Coca-Cola in 1998 was worth $85 a share. Ads, how much is it worth now? I think you told me, was it 40 or 35 or something? He said he should have sold it when it was $85 a share because that's the period of euphoria. He should have sold it at $85 a share. That's what he said. He should have sold it in areas of euphoria, but he didn't. He held on, which isn't a problem because the guy's still loaded, right? But he did say, guys, if you see a very big peak, if you see euphoria, maybe you should sell in it. Yeah, don't keep holding on because the price will just come back down and it might not reach it again. Okay, so all those Bitcoin people who didn't sell, right, probably like, oh, fucking hell, like now I've got to wait all this other time for its price to go back up. Okay, so he's saying sell in euphoria, don't hold on, just go, let it go and buy more. That's what he says, buy more. So the lessons we've learned before we end this training, guys, is patience, excellent networker, deal maker, non-emotional in investments, hardworking, and I hope you're writing this down, guys, because otherwise why are you on this training, right? Hardworking, prudent, wary of unnecessary expenses, studies the industry, long-term mindset, long-term competitor analysis, personal development, accepts full responsibility. That is the lesson that we've learned from Warren Buffett. He's pretty sick. How many of you guys think that he's a sick guy? Like, he should be famous, like way more famous than he is. Yeah, like, you know, like, he's sick. Everything that he's done shows you how it can really generate extraordinary amounts of wealth. Before we end this training, I do want to go over Coca-Cola, just for ads really. Coca-Cola, right? It's actually a very good kind of mindset to think about in terms of what to invest in. Coca-Cola was probably one of the best investments that people are saying to date for him. Why did he invest in Coca-Cola? That's what I really want to go over, okay? So during the 10 years prior to the purchase of Coca-Cola, earnings of the share grew by 11.1%. Well, actually, share price grew 10.7%. Okay, so write that down, 10.7%, just so you guys know the reason for Coca-Cola. 10 years prior. Yeah, 10 years. I'm just going to repeat that again. 10 years Warren Buffett knew about the pricing, okay? He didn't say in 1 year, he didn't say in 2, he said 10. It grew 50% faster than all S&P 500 firms. Coca-Cola grew 50% faster than all S&P 500, the S&P firms, right? Buffett saw this and knew it would go for many years to come. So this is called a growth investment. So you want to write down, billionaires like growth investments. Yeah, they don't want quick returns. You're trading, you know, in and out, coming in and out and withdrawing every Friday. That's quick returns. But he had a growth mindset and a growth investment in Coca-Cola. Yeah, So it was about 10%, whatever, didn't grow too much, but it did 50% better than all other companies. So how do you identify a great investment? Well, how did he identify a great investment? First thing he did, and this is what he says, is he looked at the sales and earnings to see the track record. He didn't look at the share price increasing. He looked at the sales and earnings for the track record more than 5 years, right? 5 years. That's the mindset he went in by. 5 years. Next thing that I found really crazy is that he looks at the relations with employees. He looks at the relations with employees. His mindset is that enthusiastic employees lower costs for the company. Write that down. Enthusiastic employees lower the costs for the company, which means it's a very good investment to make because it will have lower staffing costs. Now, it makes sense. Guys, why do you think it'll be lower the costs for happy employees? Write in the chat why you think it'll be lower the costs for happy employees. Why would it be? Why would enthusiastic workforce be lower the costs? Good work ethic, content, they will work harder. Why else? Why would a happy workforce lower the cost for a business? And why should you look at that when investing in a business? Share the brand well, mindset. You will not have to hire and train again. Exactly. Retention. So all of you guys that are building culture for IM, right, for your business and all the things that you're doing is a very good skill to have in business, right? Not just in network marketing, guys, in business. Happy employees are loyal to the business. Exactly. They are loyal to the business. Do you know why? Because they want to stay with the culture. So Warren Buffett actually wanted that culture in a company when he's investing, right? Warren Buffett wanted that culture. So all you guys are doing to keep culture in your IM business, just remember you can transfer that into any business, okay? Any business. It will lower your costs for all businesses, okay? So don't think everything you're doing is just for IM. It's not. It's a life skill, guys. Happy employees lower the cost of your business, and you do not have to spend money to retrain, to rehire again and again and again, because that's costly. Okay, so checklist of what we learned today. Risk management. We have to understand risk management. We have to make sure, and you know what, like Az goes on about risk management so well, right? If you're not listening to him when he's talking about it, I feel for you. Long-term goals. Be asset rich. Read a lot and know how to speak to people. Okay? Risk management, long-term goals, read a lot and know how to speak to people and be asset rich. So the lesson here is billionaires have a very prudent mindset when it comes to investing. They do not invest in assets that depreciate and have amazing money management skills. So one thing that you guys should take away from this training is there's countless lessons, but one of the main things is money management. How are you well at managing money? What do you spend your money on? Are you investing in the right things? And are you speaking to the right people at the right time? Okay, so that is the end of this morning's training, guys. I hope you enjoyed it. Do you guys have any questions? Hope you guys enjoyed it. I told you it's a fire training. Like, honestly, I changed this training, all of it, in the morning, by the way. I was like, this is sick. I'm going to do this instead. Guys, do you have any questions? If not, that is the end of the training. And I do want you guys to really take this whole week, not just today's training, but this whole week into next consideration, okay? Now, that is the end of the training. Guys, have an amazing, amazing, amazing weekend.